This is Eric Mother from Mother.com with a brief weekend market analysis video. In this video, I'm going to be covering the major averages only. All right, let's take a look here. Yesterday, we had a big up day as far as the US markets are concerned. And now we see a little bit of a give back of those gains from yesterday. For example, yesterday, the Dow was up 330 points at the close. Today, giving back almost 200 points or so. So in this brief video, I'm going to be taking a look at the big picture. We can see here for the S&P 500, as we've been discussing, as long as we are holding above 69.1, this market continues to be strong. Failure for the S&P 500 to hold above 69.1, and especially, and I believe this is key for all markets around the globe, especially if the markets turn negative for the month, that might actually change the outlook for the general markets globally, which might indicate with a negative market that we are going to be looking at a major drop potentially for most of the new year. And the opposite of that is, as long as markets are positive for the year and for the month, general markets globally remain to be stable to outright bullish. And I would say that's pretty much generally the outlook for the entire global markets and also for what could take place over the next couple of months. We take a look at the NASDAQ. NASDAQ is holding above 69.1, so bulls can be encouraged that the NASDAQ is holding above the threshold, which would be similar to this period here coming into 2017, where we jumped above that threshold, the 69.1 level, which is my own researched number. Based on 1.618, the Egyptian constant. As we can see here, in this period here in 2017 going into 2018, the market held above 69.1, and of course, we go into this amazing run. So again, this remains the key, above 69.1, and this market will continue to be strong. Expect pullbacks to be shallow in this phase. Otherwise, rejection here at 69.1 could be a signal that this market is due for a major correction. And of course, we continue watching the Dow to see whether it can move above 69.1. And that's what the bulls would want to see, movement above 69.1, while the bears would be encouraged to see that the market, as far as the Dow is concerned, gets rejected around current levels and starts pointing down again. We've established in this analysis that if the markets turn negative, then that means that the RSI is not moving beyond the current level, which might suggest, in other words, that the next major trend is lower. So, as long as we are positive for the month, the bulls are in charge. And if the market turns negative, then that would signal high probability that the next trend is going to be to the downside. Let's not forget that on the weekly charts, the major averages in the US continue holding above 69.1. This is the Dow, just slightly above 69.1. Of course, bulls want to see this market clear and move beyond the current RSI level, while as we go into the new week, bears would want to see the Dow being rejected when trying to move above the threshold. So that remains something to watch. But let's not forget, we continue seeing a strong market because the S&P 500 is well above 69.1 on its weekly, and we can see the NASDAQ also continues being above 69.1 on its weekly RSI, which continues to be a sign of strength, which is similar to this period here in late 2017 when the market took off and had a strong close and beginning to the year in 2018. All of that because the RSI for the NASDAQ held above 69.1. And again, you see it very clearly. Let me show it one more time. Holding above 69.1 can give very strong moves in the stock market. One of the things that we can look towards for guidance is the biotech space, which has been on fire recently. But now we see evidence of potential failed breakout and we've seen that over the last 2 weeks the biotech space has pulled back. So this is a concern. Don't forget that we have RSI 69.1 rejection also on the weekly. So the BTK showing some type of a look that is not very good. Also on the monthly for the biotech space, take a look at this area here on the RSI where we are seeing this pullback at the beginning of the month, beginning of the year. But we can see a pullback here as far as the RSI is concerned. This is not a good look in my opinion. In fact, if you take a look at a longer view for the biotech space and you take this area where it is stalling right there and go backwards, something like that, we can see some of the bullish areas here. This move above the red line here in 1999. We can see also support here. I'm just highlighting some of the major support here in 2012 off the lows here. And on the flip side, we can see a break below the red line led to a major break in the biotech space right here in 2001, late 2001. We have periods of resistance here and here in 2004. We have an area of uniform activity rejection here in 2008. Recently, we saw that we moved above this area, which is this entry in 2017. The market has moved higher, but we broke below it in late 2018, found resistance here in early 2019, and now we are showing potential for resistance in early 2020. So if this continues to be resistance as far as price is concerned, chances are the next major trend for the biotech space, which has been leadership, looks like the next major trend might actually now be for a reverse, which could suggest that this is leading the market lower. So the only way to correct this is by reversing and moving above this red line. So movement above this red line is needed. Otherwise, things are pointing to the possibility that this is leadership now on the way down. That's it for me for now. Otherwise, I should have new analysis at some point, maybe in the new week. Enjoy your weekend. This is Eric Mwathe with Mwathe.com. As always, good luck, peace, and blessings. EACS. Woo!